Since the first time that I talked about buying Nubank stock back in January of 2023, whenever the stock was at $3.80, now it's above $15 a share and nearly 4x on my investment. So I should take my money and run, right? The only problem is I still think that it has much more to go. Let me explain why in this top 5 reasons to buy Nubank stock now. Reason number 1. Expanding customer base. At 104.5 million users, they actually grew 25% year over year, showing significant user growth. But 95.5 million customers come from Brazil alone, and that even was up 20% year over year. Considering the fact that they have a relationship with 56% of the total Brazilian adult population, growing 20% year over year is just phenomenal. Now, Mexico is a whole other beast. At 7.8 million users, that was up 117%. Now, if you know anything about Mexico, it's a much smaller population than what we have in Brazil, but the GDP per capita is about 30 to 40% higher than it is in Brazil, offering still a very large opportunity than what they have in their main country that they operate in, Brazil. And then there's Colombia at 1.3 million customers, which is up 86%. But 400,000 of those users had just come in the last quarter due to the fact that the Colombian audience now has availability to news deposit accounts. And the statistics across all 3 geographies are just mind-blowing. For one, they are the #1 credit issuer in all 3 countries. They also have a primary banking relationship with roughly 60% of their total checking account users across all 3 geographies. And even in Mexico and Colombia, which are by far their newest geographies, they're already capturing 70% of all new fintech deposits. So their deposits are growing better as a larger percentage of people's overall net worth is coming over to Nubank. And just like any other fintech, if you have their deposits, you also get their spending. And spend on the Nubank platform is just blowing up. Now, it's a little bit cyclical. You have to look through Q1 to Q4 being the highest because of holiday spend, but it is still growing significantly quickly. And it's growing into the segments that Nubank wants to see. For example, high income purchase volume is the fastest growing segment at over 70% growth just year over year. And they're taking this extremely large user base and expanding it into so many new products like secured personal loans, travel services, multi-currency accounts, telecom services, an in-app shopping marketplace with payments, ads, SMB banking, the whole 9 yards. But this only matters if this translates into Nubank making some real money. Reason number 2, strong revenue growth. Total revenue actually increased 65% year over year, showcasing some robust financial performance. You're seeing really strong trends in monetization, but also them cross-selling into all of those new products that we just talked about to their existing user base. You see this highlighted in average revenue per active customer as it continues to rise up to $11.20 per month for each user that's on its platform. And the best part about Nubank, the longer people spend on their platform, the more likely they are to spend more and utilize more of Nubank's products. This is also backed up by the 83.4% user activity rate, showing off high customer engagement, and this is revenue-making engagement, and it also has not slowed down in a very, very long time. This trend is continuing to increase and will lead to higher engagement rates whenever Nubank pushes out new products to their members if they're already on the app to receive them. Ladies and gentlemen, I wanted to take a second to announce a new partner on the channel that I'm super excited to start showing everyone that trades the way that I do. If you haven't heard of Moomoo yet, it's an incredibly intuitive and user-friendly platform that's great for both beginners and experienced investors. I've been using Moomoo for a while now. One of the things that I absolutely love is the combination of the seamless mobile app and desktop dashboard, which allows me to trade wherever I am with ease. Plus, they offer commission-free trades on stocks, ETFs, and options with an insane amount of data and news to help you along the way to becoming a better investor. For those that are new to investing, learning with hands-on experience is absolutely crucial, but can be costly if you don't quite know what you're doing. So reduce those learning risks with Moomoo's paper trading platform, giving you all the experience of real market data, but without risking your hard-earned dollars. They also have an extensive library of educational resources and tutorials that can help you make smarter investing decisions. So join the 22 million users already on Moomoo and click the link in the description down below to jumpstart your investing journey with up to 20 free stocks whenever you make a qualified deposit. Moomoo is also giving new users 8.1% APY on your uninvested cash while you plan your first trade. Plus, if you're already a trader and want to graduate to a more sophisticated platform, transfer your portfolio to Moomoo and earn up to $300 in cash rewards. Go to futureinvesting.pro/Moomoo or click the link in the description down below to take advantage of these awesome promos and experience the power of Moomoo. Thanks again to Moomoo for sponsoring this video, but now let's get back to the content. Nubank's total loan portfolio is now up to $18.9 billion. That's up 49% year over year. This is bringing in just over 60% of their overall revenue, by the way. But within this large portfolio of loans, we also need to try to look for some safety and diversification. Nubank knows this. So they're spreading out their total loan portfolio between credit cards and starting to actually break into personal loans. Just year over year, they went from 19% of the total loan portfolio being personal loans to now over 24%. Inside that 24%, over 13.8% of their personal loan originations is from secured loans. That's up from 1% year over year. But in the credit card side, we're also seeing a shift to more diversification. For example, we're shifting away from just revolving type credit cards to also installment style repayment cards. Installment balances on credit cards now make up for 28% of their overall portfolio, which is up from 19% just a year ago. But how long can this growth be sustained? I mean, other banks and fintechs have had some problems running into some regulatory issues. Well, Nubank has thought about that too. Being 3 times above the regulatory minimums, they can grow so much larger than where they currently are, even without growing. Yet, if we even look at their loan to deposit ratio, you can see it's roughly around 40%. Normally, for other institutions in Brazil, this is anywhere from 80 to 100%. So much more growth to go there before we get into any weird territory where we might be needing to slow down. But that's the thing. Nubank's total addressable market is showing that Nubank does not have to slow down for any foreseeable future. But do they have the means to fund this growth if it means going to be costing them a lot of real money? Can they continue to burn cash at will in order to fund this growth? Reason number 3. They're highly profitable. Net income just came in above $400 million for the quarter at 134% year-over-year growth rates or a 17% net income margin, indicating that they can absolutely continue to do this, and we might not even have seen how great the margins can truly get, meaning more profitability going forward as they continue to expand their revenue. Now, if we look at this from a return on equity standpoint, it gets even better from here at an ROE of roughly 28%, which is just some of the greatest numbers you're going to see in the entire industry. And still yet, no plateau or anything along these lines, just continues to grow in the right direction. Or why don't we look near risk-adjusted net income margins, right? What this is sort of showing off is, it's been one of the largest bear cases essentially, is that as Nubank grows, they are going to have to expand to riskier and riskier borrowers in order to continue to hold up their growth. That's been 100% true. But their risk-adjusted net income margin shows that they continue to make more and more money, currently at 11%, even past their higher cost of funding and credit losses being high. They are still earning more and more from those users. The end of their growth and profitability in any way that you want to look at it is not done here. In absolute numbers or on a margin percent basis, Nubank continues to grow. Now, why is that? Well, because of reason number 4, efficient operations. Their cost to serve a customer remains some of the lowest in the entire world, and their efficiency ratio, their one metric that they show off to track operating and transactional expenses divided by their total revenue, continues to be at better and better rates. Now, how they remain their total cost to serve being so low, even disregarding the fact that costs go up the more products that you serve per member, they continue to cross-sell, yet cost to serve remains unmoved, and what they said will be below $1 for the foreseeable future. And their competitors just simply cannot compete because they're not completely digital and they're not completely cloud native fintechs the way that Nubank is. Nubank has full focus on keeping costs low while also looking to improve operations. You can see that in some of the actions that they've taken in order to actually consolidate and have a more holistic view of their clientele while also getting rid of some of the duplicate jobs that they had across multiple different customer factions. Essentially meaning you don't need a customer service team if you have a deposit account or a credit card or a personal loan. That can all be one large customer support team. And they did just come out of a period of lowering their expenses even while growing the total business in general. Seems like we're on the other side of that and back to growth, but you can see how they make these steps in order to keep themselves very tight around the belt in order for them to continue to operate efficiently. Even whenever comparing to other fintechs on expenses that they absolutely can control, they have been extremely low whenever compared to something like stock-based compensation as a percentage of revenue versus other banks or fintech competitors. Now, the only reason they can do that is because of reason number 5, their culture and team. This is one of the most important yet regularly overlooked aspects of a business. Let me try to help to explain why this is so important. See, when companies are super young, their founders can usually make some very bold and risky decisions because they're not risking a lot. Yet, if you actually look through the most consistent billion-plus-dollar companies that have emerged over short periods of time, I'm talking 10, 20 plus years, it is usually made of some very risky bets. But as the companies get older, it's very hard to continuously put out those risky bets because now you're risking a very large operation. Now, to some degree, Nubank is no different than that, right? Whenever they were young, they were easy to make very risky and bold decisions that helped them grow whenever they got things right. But that actually never quite changed. Nubank continues to make very bold and very risky decisions where some of them are not going to pan out, but the ones that do greatly pay for the mistakes of their attempts whenever they were going for other bold decisions. This is what makes Nubank outstanding in a group of exceptional companies, the 1% of the 1%. They have successfully navigated their company through rapid growth and expansion, making risky bets, and continue to do so even after they've won. And Nubank still to this day has not lost that startup culture. Over 50% of their workforce is still focused on technology and analytics that is emphasizing innovation. Even though people will look at them as a bank, they are very much a technology that just happens to be in the banking sector. Even their own CEO, David Velez, said 41% of the entire Nubank workforce is focusing on moonshot projects that are either not to scale or not even launched yet. It takes a true leader to make these types of decisions, and you can see that in David Velez. I mean, he's not even a Brazilian who started a Brazilian company. He didn't even speak Portuguese whenever he started Nu. He wasn't a banker, he didn't work in credit, and he's not an engineer. He is truly just a visionary who can lead a team and is one of the greatest capital allocators of our time. Whenever looking for companies that I want to invest in, I look for a leader just like David, right? Someone who welcomes challenges just for the sake of winning. Take this, for example. David Velez, during a time when the stock was low and under pressure, fully cut off his complete compensation package of $356 million. The thing is that over a 7-year period, that's not even that large of a compensation package for investors to stomach. But David wanted to show off that he cared more about the business than he cared about his own personal wealth, and that's why he made that decision. A mission-driven CEO that is able to drive that same mission-driven behavior to the rest of the entire Nubank enterprise, creating a strong company culture, and you have to really give it to him. A lot of the retained success of this entire business has to be credited to the one man, David Velez, who, by the way, holds the largest voting share of the entire company. So as long as David remains at Nubank, I believe that Nubank will continue to make bold and risky decisions that will not always pan out, but overall, the wins will outpay the mistakes that they make over the long period of time. For these reasons and the helpful added nature of international diversification, I welcome Nubank into my portfolio still at a $15 price range.